Wall Street is quietly preparing for something big. Most investors have no idea. Let me tell you something that might sound crazy. Right now, Wall Street is making billions of dollars. Not by buying stocks, not by selling stocks, but by selling you the illusion that everything is fine. And the scary part? Most investors watching this video right now have absolutely no idea it's happening, because underneath the calm market headlines, something very unusual is unfolding. And if you don't see it early, you could spend the next 5 years rebuilding losses that were completely avoidable. Stay with me, because in the next few minutes I'm going to show you the silent shift happening in the market right now. Why institutions are positioning differently than retail investors, and the 3 signals smart money is watching before the next major move. The market looks calm, but it isn't. On the surface, everything looks perfectly normal. Indexes look stable. Your retirement account might even look decent. And financial media is telling the same comforting story it always tells. Markets are resilient. The economy is adapting. Long-term, everything is fine. But here's the problem. Markets have a habit of looking the safest, right before they become the most dangerous. And if you zoom out just a little, the cracks start to show. Hold on, let me ask you a strange question. If the market was secretly becoming more fragile, do you think Wall Street would announce it? Of course not. They would do what they've always done. They would quietly adjust their positioning, while everyone else stays comfortable. The game retail investors are playing. Here's the uncomfortable truth. Most individual investors are playing the exact game Wall Street wants them to play. They buy when excitement peaks. They panic when prices fall. And they rarely ask the single most important question in investing. What is this asset actually worth? That question separates 2 kinds of investors: the emotional traders and the stone-cold investors. The emotional trader reacts to headlines. The stone-cold investor reacts to value, the valuation illusion. Right now, we have companies trading at valuations that require absolute perfection. Perfect economic growth, perfect consumer spending, perfect interest rate behavior, perfect global stability. And when you stack that many assumptions together, you're no longer investing. You're gambling with a spreadsheet. Investing joke. One investor once told me, "I only buy stocks that are guaranteed to go up." I asked him, "Oh really? What's the ticker symbol?" He said, "I'm still waiting for it." That's the problem with markets. Everyone thinks they found certainty, until the market reminds them that certainty doesn't exist. What smart money is actually watching. While retail investors chase headlines, the best investors in the world are watching 3 very boring things. And boring is exactly where the money is made. Real cash flow. Not accounting profits. Not adjusted earnings. Actual cash in the bank. When the economy tightens, cash flow becomes oxygen. Balance sheets. Debt was easy when money was cheap. Now it's not. Companies carrying massive debt loads could face serious pressure. But businesses with strong balance sheets? They survive downturns. Sometimes they dominate them. Management quality. Who is running the company? Do they allocate capital intelligently? Do they own shares themselves? Or are they simply collecting stock options while investors take the risk? Great businesses can be destroyed by bad leadership. The biggest threat to your wealth. Here's the ironic truth. The biggest threat to your wealth is not inflation, not interest rates, not geopolitics. It's your own behavior. Panic selling, buying hype, checking your portfolio 17 times a day. These behavioral mistakes cost the average investor 2–3% per year. And over 30 years, that becomes a fortune lost to emotion. The hidden advantage of individual investors. Here's the beautiful irony. Individual investors actually have 3 advantages over Wall Street. Advantages most people never use. You can invest in smaller companies institutions ignore. You can wait years for the right price. And you don't have a boss demanding quarterly performance. Those advantages are enormous, but only if you actually use them. The investors who will look back at this period 5 years from now with pride won't be the ones chasing hype. They'll be the ones who stayed disciplined, while everyone else got distracted. The opportunity hidden inside fear. Something fascinating happens in every market cycle. When prices are rising, everyone wants to invest. When prices fall, everyone suddenly becomes cautious. But the strange paradox of investing is this: the best opportunities rarely appear when people feel comfortable. They appear when uncertainty is high. History shows this over and over again. During market fear, great companies become temporarily undervalued. Weak investors panic and sell. Long-term investors quietly accumulate assets. The investors who become wealthy are often the ones who remain calm during periods that make everyone else nervous. Think about it this way. If you walked into a store and everything was 30% off, you would probably feel excited. But when the stock market goes on sale, people suddenly become afraid. Smart investors train themselves to reverse that instinct. They prepare for opportunities before they arrive. The wealth gap that is quietly growing. There is something else happening in the world right now that most people don't talk about enough. The gap between people who understand investing and those who do not is growing rapidly. Not because markets are unfair, but because knowledge compounds just like money does. Someone who understands investing early in life might compound wealth for 40 or 50 years. Someone who never learns may work their entire life without building significant assets. This is why financial education matters so much. It's not about becoming a Wall Street expert. It's about understanding a few simple principles. Buying assets instead of liabilities. Avoiding emotional decisions. Allowing compounding to work over time. Those ideas sound simple, but when applied consistently for decades, they can completely transform a person's financial future. 3 money-making ideas anyone can start. Now let's talk about something practical. If someone watching this video wanted to start improving their financial future this year, what could they actually do? Here are 3 ideas that many people are using right now. Idea number 1. Dividend investing. One of the simplest strategies in investing is owning companies that pay dividends. A dividend is simply a portion of a company's profits paid to shareholders. Over time, these payments can grow. Some investors build portfolios where dividends pay for groceries, utilities, or even part of their retirement. The key is patience. Dividend investing rarely creates overnight wealth, but it can create a consistent income over time. Idea number 2. Small online businesses. The internet has created something extraordinary. Anyone with knowledge or skills can now create small digital businesses. Examples include selling digital guides, creating educational YouTube channels, publishing books online, building niche websites. Many of these businesses start small, but once created, some of them can generate income for years. In fact, many creators today earn income from content that took a few hours to produce. Idea number 3. Buying undervalued assets. The third idea is the classic strategy used by many successful investors. Buying assets when they are temporarily undervalued. This could include stocks during market downturns, small businesses that need improvement, real estate during slow markets. The principle is simple: buy when prices are low. Be patient. Allow time for value to be recognized. This strategy requires research and discipline, but historically, it has been one of the most reliable ways to build wealth. The future of your financial life will not be determined by one decision. It will be determined by hundreds of small decisions over time. Learning, investing, avoiding mistakes, staying patient. The investors who succeed are rarely the ones chasing excitement. They are the ones who stay focused on long-term progress. Now I want to ask you something. If you had $10,000 to invest today, which one would you choose? Dividend stocks. A small online business, undervalued assets. Comment the number below. I read every comment. And some of the smartest ideas shared here may appear in a future video. And if you want to learn the 7 investments that many millionaires quietly buy before the age of 40, watch the video appearing on your screen right now.